For more, let's bring in Barton Crockett, senior analyst at Rosenblatt Securities. He's got a buy rating and a 15.30 price target on the stock. Barton, great to have you with us.
Thank you. Happy to be here.
So will Netflix be a better company, a better streaming service, all of the above, if it buys some assets from Warner Brothers?
Well, I think it's, I think obviously WB has iconic IP. I think the challenging thing is the box office side of it. So, Warner Brothers is toe-to-toe with Disney for #1 in box office globally. And Netflix's, stated strategy is streaming first and really box office hardly ever. And it's hard to see how those things would culturally fit together. So, I'm skeptical that this happens. I mean, I think that it makes a lot of sense for Netflix to kick the tires, take a look, learn more about one of their big competitors through this process. But, I think it would be very difficult for them culturally to completely pivot to become, one of the biggest box office. And it's also very hard, I think, for Hollywood to buy into that idea. I mean, how can you trust that Netflix would actually keep the theatrical given their years of, casting kind of aspersions on the whole idea? So I think it's challenging for that and some other reasons.
If you could break apart WBD into various assets like a library, the studio, et cetera, can you sort of pair up these pieces with various players on the chessboard to create, super streamers, super studios, et cetera?
Well, I suppose if you wanted to do a deep dive and just give Netflix the library, sure. But libraries deteriorate without new production. And the new production, at least on the movie side, is very theatrically driven, theatrically motivated, theatrically, culturally kind of tied into that universe of directors and talent who want that. So, that strikes me as really hard to fathom how Netflix can completely 180 pivot and do that and be embraced by Hollywood and not generate a whole bunch of pushback of people worried that, geez, they might shut down all of the movie production for one of the biggest studios into theaters, which I think politically and in Hollywood would cause an uproar.
Barton, Karen, thanks for being on. So can you tell me on your price target, which is, I'm a shareholder, so I hope you're spot on or maybe even below where it'll go. How do you get there, though? What's the multiple and what has to happen for it to get there?
Yeah, look, I mean, I'm assuming that Netflix can have very good growth in earnings per share. We're modeling like a 28% CAGR over 3 years with 2026 in the middle of that. We think it can trade at a 45 PE, which is a premium to the growth, but I think a premium that it would command just given its dominant position, secularly kind of strong position, and frankly, their past kind of tendency to beat and raise. So estimates move up and that multiple can move down. So that's how we get there.
Barton, in all of this, where does Comcast fit in, if it does at all? The stock hit a 5-year low.
Look, I think, Comcast is, would have some difficulties doing a big acquisition just given the challenges in their core kind of broadband business that's really pressured the shares. And to go pivot a whole bunch of capital to buying the Warner Brothers assets at this time when the stock's at a low, I can understand looking at it. I can understand doing the due diligence. I think it's a long shot to see that either, Comcast or Netflix prevailing over, one of the world's richest families, the Ellisons, if there's any type of auction or bidding war.